I am a certified general accountant, and I started just like you. I came to Canada 37 years ago. I came from Egypt. So now what we are going to discuss with each other, I see you have a workshop coming up. It's called Looking for Work. And when you look for work, you find a job, the government really is interested in getting some money out of you. So that's why we are going to talk about income tax. There are many types of taxes in this country, but today we are only going to talk about personal income tax. Okay? There are two things we need to discuss first before we go on. Number one, if I speak too fast, stop me. My wife tells me, Mark, sometimes you speak too fast, nobody understands what you're saying. So if you think that I'm speaking very fast, just stop it. Deal? Yes. The other thing is that today is your lucky day. Simply because you can ask any question and you get an answer for free. How's that? Tomorrow, if you come to my office, it's a different story. So all questions today are for free. Deal? Yes? Yes. Okay. So now we can go on. Canadian tax system. We tell the government how much money we make, and the government tells us how much taxes we have to pay. It is straightforward. So in this country, we have a system called self-assessment system. As I said before, at the end of every tax year, a tax year starts in January 1 and finishes on December 31st. So every year, we need to file a tax return. Now, you need to remember that in this country, if you do not file your tax return and you owe the government money, the government is not going to be too kind to you. And the same thing, if we try to cheat our income tax, our government does not like that very much. Okay? So when you first came, you applied for something called PR card. Remember? Yeah? Yes. That card with your picture on it. Oh, remember that? You need to remember that. I'll tell you why. Because everyone has one of these cards. It's called permanent. And once you become a permanent resident, you have to file a tax return. So you were so happy when you got this card. They did not tell you that now, guess what? You're going to start paying taxes. And the problem is, you cannot return this card back. All right? So, everyone file a tax return by April 30th. So if you came to Canada in November or October 2013, your first tax return is April 30th, 2014. We're okay? If you come to Canada, say December 20th of 2013, and you stayed only 10 days in that year, your first tax return, April 30th, 2014. Now, if you came to Canada in 2012 and you owe the government money, you're late. Why? Because you were supposed to file April 30th, 2013. Is there any question, people?
Well, You see, I have this basic question to ask. What exactly this mean of tax return? Like, what exactly, how it implies?
Okay. The question is, what exactly is tax return and what does it imply? Tax return is a form, you fill it up, or your accountant fills it up. It tells the government how much money you make and how much taxes you pay in advance. And if you have a refund, they have to send you a check. If you owe some more money, they're going to send you an invoice. So the tax return is a form. You can even do it on the internet if you want. Or you can go to an accountant and let him or her do your tax return.
Does it mean that if you pay more, then they'll return you back the money?
We're going to talk about how much you're going to pay.
All right.
That's one of your lucky day stuff. All right? Any other question? Yes, ma'am.
You arrived in February 2014.
Yeah.
What is the due date to pay the taxes?
The question, if you arrive in February 2014, when do you have to file your first return?
Yes.
Again, you need to remember, tax returns are from January to February. So you came in February 2014, your first tax return will be April 30th, 2015. Okay? A year after you came. Any other questions?
Same like January.
Same like January. Yeah.
And what if we miss the time?
Now, what if we miss the time? I told you the Canadian government likes you, but they like your money more. So, what if I miss the time and I owe the government money? The first thing they're gonna give you, a 5% penalty. That's not the end of the story. For every month you're late, they're gonna add another 1%. So if you are late, say a year, 12 months, and you owe the government money, they're gonna send you 5% plus 12, that's 17%. You have to pay 17%. That's $17 for every 100 you owe. All right? So now, what if I don't make money? And that's the question on your mind, because you just came and some of you have not even started work yet. Here is the good news. When you do not make any money, the government wants to help you out. So, first thing is something called GST credit. A GST credit is to help you for paying the goods and service taxes. Every time you go and buy something, you pay 2 taxes. Am I right? One is 5%. It's called GST, or goods and service tax. And one is 8%, which is called provincial sales tax, or PST. The people who are not making money, or the people who are making a little bit of money, the government wants to send you a check every 3 months to help you paying for that GST. So that's one reason. If you are not making money, maybe it's a good idea to file tax return. The second reason is, if you have any children under 18, there is also something called the child tax benefit, which is sent to you every 3 months, depending on your income. The more money you make, the less money the government is going to send you, which is fair, right? The third reason that you need to file, if you have children under 6, the government wants to send you a check every month for $100 for each child. Okay? If you have 2 kids under 6, you get $200. If you get 3 children under 6, you get $300. If you get 5 under, no, I don't know how to do this. All right? So even though if you are not making money, 3 reasons to file a tax return: GST credit, child tax credit, and the children under 6th grade. It's called universal benefits. How are we doing? Yeah? Okay. So now, let us take a look on how do we make money in this country. Most of you gonna start making money by working for someone else. That someone else is your boss, is the employer. That someone else tells you what time to come every day, when you can have coffee break, what time is your lunch, and what time you can go home. If that is the case, this is an employment income. Employment income. All right? Now, at the end of every year, the employer will give you a piece of paper like this. This is called, what's that? What is it again? You need to remember that. You know why do you need to remember that? Because if you stay in Canada for the rest of your life and you work for something else, for some employer, you're going to get a T4. So that T4, it has your social insurance number. Everybody has a social insurance number, right?
Yes.
And it has your name, your address, how much money you made last year, and how much taxes they took from you. Every employer has to send you a T4. So if you work for 2 employers, you'll get 2 T4s. If you work for 5 employers, you get 5 T4s. And these T4s should be issued by February 28th of every year. February 28th of every year. Okay? Remember, we need to file up till April 30th. So on March 1, you will have all the T4s that you need. And if you don't, you need to phone the employer and say, I worked for you last year, where is my T4? It is very possible that you change the address. Most of us do when we come first time, which keep changing the addresses, and they sent you the T4 on the wrong address. The employer has to issue the T4. There is no ifs or buts about it. Why? Because if he or she does not issue that T4, they're gonna pay 1,000 penalty for each employee. So they're gonna send you T4. There is no question. All right? So on March 1st, the government knows exactly how much money you made last year. How? Because the employer sends a copy of the T4 he or she gave you to the government. So March 1, the government knows exactly how much money you made. Remember, the filing date is April 30, yes? So the government is gonna wait and wait and wait some more to see what you're gonna do. Did you file your tax return or not? So April 30th comes and goes, and you did not file your tax return. You're gonna get a phone call. Now, the government of Canada is not gonna call you to say, how are you today? Or how is the family? Once they say, we are Revenue Canada, you are in trouble, right? Mr. Mark Fouad, did you make $30,000 last year from ABC company? Huh? I can't remember. Oh, Mr. Fouad, did you get a paper called T4 that looks something like that? Huh? Oh, oh, that paper, my baby was playing with one like it, and I threw it away. Cheating in taxes in this country is a criminal offense. Criminal offense. It's not just like passing the red light or a speeding ticket. It's a crime in your records. So we need to all remember the T4. The other way to make money is to work for yourself. Meaning, you are the boss. Nobody tells you what to do. You own a source of income. So for example, you can drive a taxi cab. That's your business. You can paint your friends' homes. That's a business. You can fix your neighbor's cars. That's a business. All right? Another way to make money, if you brought some money with you from back home, or if somebody back home gift you some money, you can put this money in the bank or invest it in the stock market. And any money you make on that is called investment income. Investment income. Another way to make money, when you're 65, the government is going to help you out for your retirement with something called pension income. Pension income. Or you can buy an old house, fix it up, paint it, and you can sell it after a while. And this is called capital gain. Capital gain. All right? On the second page of your handout, there is a schedule like this. Federal tax rate. All right. So these are the tax rates for federal, meaning for Canada, right? You make up to 43,000 and some, your taxes are $15 for every 100, 15%, $15 for every 100, okay? The more money you make, the more tax rate you fall into. So if you're making 136 and some, your tax rate can go up to 29%. So as you can see, the more money you make, the more taxes you pay. Okay? This is federal. These are 2014, which you're going to use for filing 2014 tax return, which is April 2015. Okay? So these are the rates. But we live in Manitoba, right? And we need also to pay Manitoba tax. Again, the first 31,000, you pay 10.8%, and the more money you make, the higher the tax rate. So now let's take a look at these two combined, which is provincial and federal. If you live in Saskatchewan, you're going to pay federal tax plus Saskatchewan tax. You live in Alberta, federal tax plus Alberta tax. Now in Manitoba, Canada tax plus Manitoba tax. So together, here's what we got. For the first 31,000, 1/4 of it goes to the government, 25%. Okay, that's the tax rate. The more money you make, if you make, say, over 135,000, your tax rate is 46%. That's almost half of the money you make, right? I have no problem with paying taxes. Why? Because if I pay taxes, that means I am making money, right? That means that I'm working some sort and I'm making money and I'm paying tax on it. Every time I go to the doctor, I can go for free. Am I right? I send my children to schools for free, right? In the middle of the winter, when I'm sleeping in my warm bed, somebody is cleaning the snow from the street for free. So in exchange for this, if I pay some extra tax, which meaning I am making money, it's not a big deal, is it? These are called personal deductions. Personal deductions. Personal deductions reduce your taxable income. So for example, if you send your child to a daycare because you and your spouse are working, or one is working and the other one is studying, the child care expense can be taken out of your income. So if you're making $26,000 a year and you have $4,000 child care expense, you can only be taxed at how much? 26 minus 4. $22,000. So these are called personal deductions. The same thing if you're divorced and a court say you need to support your ex-spouse and children, also that will reduce your income, the money you're paying for that. The third thing is if you move to any place to obtain a job or to study in another community college or university, this moving, which has to be more than 40 kilometers away from your principal residence now, you can deduct all the expenses that you had in this moving. Your truck, your airplane tickets, your movers. You can even claim the meals that you had on your way to the new location, as long as you can make money of that location, or you're making money of that location. Now the question says, okay, Mark, if you're so smart, how about the tickets that I came from back home to Canada? Can I claim that? You think you can? No? Why not?
It's not your business. It's for one time, perhaps.
Okay.
If you have back home business, it can be possible.
Okay. Any other comments? You cannot claim that. You know what's the reason? Before you landed in Canada, you were not a permanent resident, were you? Right? You can claim after you become a permanent resident. But you're coming in the airplane to land in Winnipeg, Manitoba. You're not permanent resident yet. So you cannot claim that move. All right? Okay. So we need to understand this is a personal deduction, meaning it reduces your income a little bit. And when your income goes down, your taxes will go down. The other set is called tax credits. Tax credits. You need to understand tax credit reduce your taxes, not your income. So at the end of the day, if you do not have tax to pay, these are no good, because you cannot reduce zero more than it is. Am I right? So this will reduce your taxes. If you're making money and you're going to pay tax on it, this will reduce your taxes, will bring your taxes down. All right? First one. Your basic personal credit is $11,138. In other words, if you have to pay $20,000 tax, take that 11,138 out, and you pay the difference only. We're good? Your spouse also has a personal tax credit. In other words, for the family, you can make $22,000 a year with no taxes, no tax implication. Okay? If you're divorced or separated and you are taking care of one child in your house, you can consider that child as if he or she is your spouse. So again, you can claim up to $22,000 personal tax credit. All right? That's good news, isn't it? Now, if you are working, your tax is going to go down by $1,127. How will they know that you're working? Anybody know?
T4.
It's a T4. T4 is going to tell them, yeah, he's working or she's working. Let us give him a tax credit. In other words, reduce the taxes by this amount. Why does he want to do that? Why does he want to do that?
Because they want you to work.
Because they want you to work. Simple. Because if you're working, you're making money. And if you're making money, you're going to pay. Hallelujah. All right. If you are 65, you're going to get help from the government for retirement. It's called age credit, which is $6,960. Again, remember, this reduces the taxes, not the income. So if your taxes stop here, we're done. They are not going to send you this money back. They just, you're okay. If you have a disability, or if any of your family has a disability, your taxes are going to go down too. Two conditions. Number one, you need a doctor's certificate. Okay. Number two, that person is a Canadian resident, is residing in Canada. So I cannot claim my parents back home because they are not a permanent resident here. It's a huge amount, 7,766. For every child under 18, your tax is going to go down by 2,255. So if you have two kids under 18, your tax is going to go down by 4,050, around there? Okay. Yes, we're doing all right? Okay. Every time you go to university or community college, or if your children go to university or community college, they get a credit of $400 a month. So that means the university or the community college is going to give you a receipt. It says so and so is registered for the university for the last 10 months. 10 months, which is the usual school year. 10 months times 400, that's $4,000 deduction in the tax. Okay? Now, most people go to university or community college do not have high income, right? Because they work in part-time a little bit McDonald's, a little bit Burger King, this kind of stuff. So if they cannot use this credit, they can transfer the credit to you, up to $5,000. So you can claim that, right? And if you're like me, we are the ones who are paying for tuition fees to the universities anyways. Am I right, for our kids? So that's the amount of credit you can get. A question? You're good? So you get a receipt from the university or a community college. It's actually a form called T2202A, and it says how much tuition your son or daughter paid and how many months they stayed in the university. So if you have a child in the university, right now, we're coming to the tax season, ask them to call the university or go to Aurora, which is a University of Manitoba site, they can download that form. Okay? There are many immigrants come here, guys, cannot find work. So what do? Study or go back to university or community college. The province of Manitoba is giving student loans to all immigrants. You do not have to be a Canadian citizen to get a student loan. You can only also be a permanent resident to get the loan. Because a lot of people who came from different countries, they are shocked and surprised that their qualification is not going to work here. They need to do an equivalency, okay? So they wait and wait and wait, and then say, okay, tell you what, let's forget about this, and let us start studying. And if you do, and you get a student loan, then the interest on that loan is tax deductible. Okay? We need to teach ourselves and teach our children that donations are a very important part of the Canadian culture. I know maybe we came from countries that do not really think of it that way. Canada is the most giver country in the world. Last year, the people of Canada donated a total of $10 billion to help other people. And the highest province that give in this country is Manitoba. Okay? I understand that you may not have money. I want you to start teach your children, give each of them $1, 50 cents, and say donate this either to a church or to any other organization. For example, Heart Foundation, Kidney Foundation, Cancer Society, and so on. Right? So every time you do that, you keep the receipts. The Canadian people like donating because they believe in one thing. Whatever I give is going to come back to me one day. And this is true. There is no question about it in my mind. The more you give, the more income you're going to raise. Okay? Now, if you do not have money, there is also a wonderful way to help out. Volunteer. There are a lot of organizations in the city of Winnipeg that they look for people to help out. Okay, so instead of I'm sitting at home watching TV, I'll take a couple hours and go and help somebody like Winnipeg Harvest or a Gabby Table or any of these soup kitchens. They will love it, and you will feel good, even though you did not pay any money or you did not donate any money. So try to learn that, because this is part of the Canadian culture. All right? And you need to keep the receipt for those, because you can cut your taxes by producing that receipt. Questions? Yes? No? Good. We talked about the goods and the service tax credit. This is not taxable. We do not pay tax on that. If you contribute to any political party, Conservatives, NDP, Liberal, keep the receipts, because political donations are tax deductible. If you go to school or go to work and you're using the bus, keep the bus pass, not the ticket. The weekly or monthly bus pass, you can claim that. No, I don't think you'll take it. You don't need the ticket. You need the bus pass. If you send your child to any physical activities, hockey, soccer, gymnastics, keep the receipts, because you can take that out of your taxes. Or if you send your child to take piano lessons, ballet lessons, another art form, also keep the receipts, because your tax is going to go down because of that. And of course, if you rent, you need to keep the rent receipt. Even if you share the rent with someone, you need to still keep the receipt. Okay? So all these are tax credits. They reduce your taxes. Now, the first tax return is a little bit difficult. But thank God there is a help. We have an office of Canada Revenue Agency on 325 Broadway. You can contact them and they will direct you to a volunteer that does income tax return. Okay? They are not going to help you if you're making too much money. They are not going to help you if you have a business income. And they are not going to help you if you have an investment income. If that is the case, you need to look for an accountant to do your tax return. This is Revenue Canada webpage, and it has so many helpful hints and tips. If you're an individual, you can go to the individual section. If you have a business, you can go to a business section. If you are a charity or giving, you can have information about that. So this is a very good site. And if you want it in English, it's available in English. If you want it in French, it's also available in French. All right? So that's a very useful website. Now, Canada is a wonderful country. But like any other country, Canada has some bad people. And there are people out there that they know that you are immigrants. You know that your English not 100%. There are some people gonna try to take advantage of you. Watch out. Do not sign any paper unless you understand what does that paper say. And if you don't understand, ask what does that mean. And if you don't answer, don't sign. Okay? On your handout, there is my phone number and there is my email address. If you have a question, send me an email or call me. Okay? But do not call me after 9 o'clock at night. Because my wife turns the phone off at 9 o'clock at night. And I learned one important thing in this country. I have to listen to my wife. Or, this is my website. It has my phone numbers, emails, and all that. Okay, I think you guys gonna be okay. Don't be afraid. Spring is coming. And I've been here for a long time. I shoveled a lot of snow, and I'm okay. And you're also gonna be okay. You just take care of yourself and your family. Remember, that's why you came to Canada. Thank you very much.